This is lesson number 2 on our higher level incomplete records question. This is E. Kelly. I've just written all the notes here to the side. We have to look at all these notes before we finish the question. We have these ones done from goodwill down to bank, so I'm just going to put an extra of them there. So we said that goodwill was the difference between the actual worth of the business. I calculated everything up here. As you get used to this question, you won't really need to show all of this here. You don't need to show the statement. This is essentially the statement of capital, all your assets minus the liabilities. You won't need to show that at higher level for incompletes, just for this question. It's kind of taken for granted that it's simple for you to calculate. So the worth of the business just goes there, and you just take it away from whatever the purchasing price is. There we go. And we'll end with goodwill. The cash account, again, you just put in the figures for cash that they give you for cash payments. We have our drawings because we're told that we took from cash, and we have our balance at the end of the year for our 550. So the difference there is just your cash sales. And bank account, again, is relatively straightforward in that you have all of your bank lodgements that are up to just short of 130,000 and all of your payments that just go above 130,000. Basically, you add them up, and then you'll always be told a little story. If you get a loan of 72 grand, it means that your bank goes up by 72 grand. And then you buy a warehouse for 60,000. We bought it here, yeah, we can see that. So then obviously you spend 60,000. And then what have you left? What's your bank balance left? So that's the first 3 notes done. I am going to get these notes done here. I'm not going to do loan yet, but we're going to aim to do debtors, total sales, creditors, total purchases, and then insurance. So debtors, what I'm going to do here is, we don't really need this. That was just me kind of showing you a guide. I'm going to drag this up, and we'll focus on this a little bit more than the notes. So debtors control account. So how do we do debtors control account? Well, remember, for debtors control account, we're thinking about this is money that we are to be paid. So my debtors control account, so we have our balance at the beginning of the year. So my balance at the beginning of the year for the debtors control account is here, 14,000. I get that up at the top. I have my bank lodgements. So my bank lodgements is money that I receive from my debtors. It's money that goes into my bank. So I'm looking at my bank account. My lodgements are here for my bank account. That's where my bank lodgements go. So if my bank lodgements go here, the debtors is part of that 32,000. Where will it show in the debtors account? It's going to be the opposite side. So this is money into my bank. So it's the debit side. So it's going to go on the credit side here of my debtors account. And just think of it like, in your bank account, this is the debit side, and payments will be the credit side. So if this is going to go on the debit side of my bank account, it's going to go on the credit side here. So I put in the first 2 figures. What else can I put in? At the bottom of the question, we're told that debtors is 16,600. So let's add that in here. We can also assume that once we have calculated our balance on both sides, it is 48,000. I'm just uncovering these here. So my balance on both sides is going to be 48,800. The difference here is going to be, I'm just going to clear this off. The difference here is going to be my credit sales. So again, my balance on both sides is 48,800. It's my balance brought down, it's a current asset. The difference between both sides is my credit sales. This is the money that I have sold, essentially. The stuff that I've sold to my debtors, and the money that I have to be received this year. So that's my credit sales. That's my total credit sales, but I want to find total sales. So I have my total credit sales, and I've also found cash sales. Where did I find cash sales? Up here. This is my cash account, and we found that the missing figure was cash sales of 171,170. So all I've done, so I'm just going to scroll down to this here, is I have my, scroll down just a bit more. I have my cash sales of 171,170, and I have my credit sales taken from here. And obviously, if I add both of those together, I now have my total sales. So remember, you get your debtors control account to find your credit sales, and your cash account finds your cash sales. Add those figures up, and then you have total sales. So that's the next two done. My next part that I have to do is my creditors control account. So for my creditors control account, again, let's look. I'm going to drag this guy down here. So creditors control account, my trade creditors beginning of the year, 17,200. So let's uncover this here, 17,200. What else do I have? So I have my bank payments. My bank payments here for creditors. So this is a payment coming out of my bank. So let's go up to my bank account here. And in my bank account, I can see that my payments are on the credit side. So if it's on the credit side here, what is this bank payment? Where is it going to go? Bank payment here is going to go down here on the debit side. My mouse is moving like crazy, and I have this uncovered. So again, because that bank payment was, it's money coming out of my bank, it'll be on the credit side of my bank account, therefore it'll be on the debit side of this account. All the other information I'm told is my balance at the end of the year being a liability of 14,300. Therefore we know that that's the balance brought down. If that's the balance brought down, that's the balance carried down. If I add up both sides, I get the balance on both sides to be 48,500. Very similar territory again here. That's my balance on both sides. This side is short 31,300. So let's add that in here as credit purchases. I found balance at the beginning of the year. That was the bank figure. It's the money that I've paid out to my creditors. It goes on that side. Reduces my balance. This is the balance at the end of the year that I still owe. That's the carried down figure. Balance on both sides. Difference is 31,300. Again, just like sales, now I need to find my total purchases. There's a little bit more to this one though. Cash purchases and credit purchases. Cash purchases are given out of cash payments. Cash purchases 51,000. Credit purchases, well, I've just found that there to be 31,300. So I have those figures, and if I add those up, it gives me my purchases figure here of 72,300. Now you can see from below that we're not actually done. Why not? Well, this is just my cash and credit purchases. So technically as a company, that's all the purchases I make. And your purchases is your stock. They're the things you buy during the year. It's your stock, and then you sell it on. But we were told that Kelly took goods from stock. So out of all the money they spent on the purchases, some of it was taken from stock and used for household expenses, which means it is drawings. Some of the goods were taken from the business, and they were the goods here that we purchased, and they were used for the households. So the number that we took was €80 per week. It's 52 weeks of the year, so we're going to take away €80 multiplied by 52, because that is our drawings. So we add that up and it's 4,160. That's my total purchases. Of that, I have 4,160 that was used for private purposes. So let's take that away because that does not belong to the business anymore. The business now has total purchases of 68,240. And just like this here, both of these figures will go in the P and L. That'll be total sales, and this will be total purchases. So that's my total purchases for this question. Now we have a good share of the notes done. If we go up to what we have here, we've found our credit sales, and therefore then we could find our total sales. We found our credit purchases from creditors, and then now we have our total purchases. So all of this is done. The only other one I want to do today here is our insurance. That's the last one I want to do, and then we've only relatively few left. And there's some of the more easier ones left to do. We've done some of these a bit before. They're separate. So insurance at the bottom here. Let's scroll down. So I've looked at insurance. Again, let's drag the question with us. So what can we say about insurance? Well, if we look at the question here, we'll see up at the very top, we'll see that we have 3 months insurance prepaid of $430. So if I've prepaid my insurance, it means that I don't owe it anymore. Insurance is an expense and I've prepaid it. So therefore it's an asset. So my balance at the beginning of the year is an asset, and I've called that balance. I've put it down as 3 months because the 3 months is, it's very relevant. They will never give you a date in accounting for Leaving Cert without that date being relevant. This date here is obviously signaling that this is the beginning of the year. If they'll give you information in the year about how much you paid for something at a certain date, it's because they want you to make a calculation. So this here is for 3 months, and we need to take note of that, because if we look through the rest of the question, the only other thing they tell us about insurance is in our bank payments. We made an annual insurance payment. So your premium is the amount you pay. So we made an annual payment of 3,000. Now, annual means yearly. So basically, every year they pay their insurance for 3,000. So obviously that comes out of the bank. So it's going to be the credit side in the bank account, debit side here, because it's a bank payment. So credit side of the bank account because it's money coming out of the bank, debit side here. So it's adding it to my insurance. This is the 3 months I had here at the start. This is the 12-month payment I made. Now, before you go looking at the rest in terms of the other stuff I have done here, I want to draw your attention to the fact that we have paid for 15 months insurance. But whenever we do this question, and we'll be finding the profit and loss, we're to find the profit and loss account for E. Kelly at the end of the year. Profit and loss is only looking at the year. It's only looking at 12 months. I don't care necessarily about how much I paid for next year. The balance sheet looks at that. But when we're doing the trading profit and loss, we only care about the money that we spent for this year. So 3 months of it is to do with this year. And then we have an additional 12 months. So obviously all of that can't be included for this year because I have overpaid by 3 months for next year. So if I'm looking at the amount of insurance that I have for this year, well, the first 3 months here are obviously going to be January, February, and March. And then I paid an additional 12 months. All of that won't be used this year. We'll only need to use 9 months of it. So 9 months out of this payment will be used for this year. So for my P&L figure, I'll have 3 months here at the start plus 9 months. How do I get the 9 months? We'll take that 3,000 figure and multiply it by 9 over 12. You get 9 months out of the 3,000 to be 2,250. So if I add up the 430 and the 2,250, it tells me here that I've spent 2,680 euro on insurance for this year. So that money obviously is my P&L figure, because my P&L is focused on what expenses you have for this year. So again, 3 months here, an additional 12-month payment, which means I paid for 15 months. The first 12 months, which will be 3 here and 9 here, will be for this year. And then about the last 3 months, what about the last 3 months out of this? Well, that's just your missing figure, because if I total up this here, the balance on both sides is 3,430. 3,430 on this side, 2,680 here. Therefore, the remaining difference is the amount that I paid for next year, which will be your January, February, and March of 2013. It'll be the following year. So that's going to be my balance carried down. It's a balance brought down. This is insurance prepaid. Therefore, if I've prepaid insurance for next year, it is a current asset. And that is the insurance note done. 3 months prepaid at the start, which makes it an asset. I've then paid an additional 12 months. Now I have 15 months paid. But when I do my P&L, I only care about 12 months. So I need to find the first 12 months. Okay, I need to find that this is January, February, and March of start of this year, and then I find the next 9 months here, and that's obviously given me my first 12 months, 2,680. Everything else, well, that's prepayment for next year, 2013. That's the next couple of notes done. As I would have set up here, we have a few more left to go, and we have our, we'll have all the figures then in place, and just like normal, trading profit and loss and balance sheet. Thanks for listening.